Good morning, everybody. It's Chris here from Serene Education with the 4 majors and latest update for the 4th of August 2011. Hi guys, just a quick recap on the 4 majors this morning, starting with Euro against US dollar on our CTC strategy template. Using it on Metastock Pro, preferred trading platform. All our strategies are programmed for this particular platform. Okay, daily chart. Yesterday saw a bullish engulfing pattern after a significant drop. Where does it leave us? Well, trading at the high end of the wick, Asian market, we've seen a lot of movement overnight on the Asian. I'll get into that a lot more along the way. But you can see very indecisive going into the European and the UK Open. Very indecisive. We notice that we are in a consolidation trade to the downside, forming lower swings, depicting a consolidation. So if you look at where we are, you can see the noticeable squeeze here. We are in an uptrend, but we are now trading to the downside in a consolidation squeeze. Institutional moving average still below us, so we're still looking blue across the board because of that. However, this squeeze is now becoming more prolonged, it's drawn out, and there are noticeable movements within that range. We are seeing a slight consolidation as we speak. However, if we fail to see a break in an attempt at the 14,400 mark soon, what we're going to see is a continuation to the downside, because you can see straight away we are having lower swings. So high, lower swing. We have seen up candle. It's imperative that we see another move to the upside of conviction to show us that we're looking for further upside movements, or we're going to see a continuation to the downside and possibly back to the 1400 very soon. Intraday, if you look at where price is trading at the moment now, you can see that the 4 hour, for example, we've seen a bearish down candle in the previous 4 hours. So you can see at Asian market, we saw the euro losing a bit of ground against the US dollar. And first thing this morning, we've seen a bit of buying in the markets. It needs, in my opinion, to be trading above 14,3600 to be classified as bullish, because by then it'll be trading above this downtrend and tackling the prior swing low. That will give us more confirmation. You can see the CTC on a 4 hour has given us the all system go. However, I would like to see more of a trade above 14,3600. And in doing so, it'll be trading above a previous downtrend or trend line in particular. And when we get that, you'll probably find that more people will come to the market and start buying more into the euro, and we should see a further steady move to the upside. I'm not going to be trading until such time. I'd like to see that happen. If not, what happens is we could just see a fake out, something where it's drawing people into the trade only for it to go against, and then we could see a return to the downside. And as I mentioned, 1400 would possibly be our first target for this pair. You can see here on a 4 hour we had a slight consolidation roughly around the 1800 mark, but ideally 1400 would be our next target. Why? Because we've been there in the past, and psychologically it's a very strong support and resistance level. So if I could just put that in, there we go. So CTC's in my favor, don't get me wrong, on a 4 hour, so that means hourly will probably be the same, a 30-minute will also be the same, but I want to see a genuine move in my favor by the market. I want the market to give me a clear sign that it's still looking for upside movement, and I'm going to act on that. I don't want to be getting into a trade against the market only for me to be faked in and to see a break to the downside. Next up is sterling against US dollar. Let's have a look at the daily time frame. Here again, you can see yesterday, or on Tuesday in particular, we had a very indecisive after a bearish engulfing pattern at a price support area. Previous support, thereabouts. You can see here previously. And what happened was we saw price fell to materialize and to push higher on that. We saw an indecisive candle at the end of that down move, which came at a prior support area. On this setup, you can see a breakup, and you can see over a 5-day period price fell to break lower, so that became a nice support area for this pair. Lower wicks, yes, but price action closed higher than that, so we saw a support area, and sure enough we had a doji at that area, and we saw a bounce higher. That's because of great figures yesterday. We saw some beautiful service PMI results on sterling, and the negative news on the US dollar late in the afternoon regarding ADP non-farm employment rates, which is it's a news event that comes out prior to non-farm payroll, and they were really negative, and we saw the sterling jump on that and trade to the upside. However, in the last since the open on the Asian market, we've seen a slight pullback on sterling against the US dollar. Why? Because we are now trading at the 16.4500 mark, where we've seen prior resistance. We need to see a break and trade higher on that to definitely give us a clear indication that we're going to see further extensions to the upside for this pair. Noticeably, you can see the trend as it stands now is looking bullish, but as I mentioned, the CTC is in our favor, but there's one last thing the price needs to do in order for it to be classified as still bullish long term. It needs to be trading above this prior resistance level. Until it's doing that, I'm only looking for possible consolidation and a further attempt at the downside, roughly to where we saw before. Notice this uptrend is in play, and as long as that trend is in play, then there's a good possibility we could see a breakout. But I want to see a clear breakout, a nice bullish engulfing, i.e. something similar of that statue happening, breaking higher, confirming me that the commercial traders out there are looking for long positions and they're buying into the sterling against the US dollar, and then I'll be looking possibly long term as a 16,700 as our first target. Until such time, looking for consolidation, possibly in this area here. So if we look at I don't have my intraday dot, but you can see that ideally I want to see a break and close higher than 16.4500. Otherwise, look for consolidation to the downside for this pair. If you look at the 4-hour, for example, on sterling, you notice we're seeing another high now, another resistance level at 16.45. 3 attempts at going higher, and we've seen a failure, and possibly bearish engulfing out. So we're looking for clear indication of possibly another downside movement. You're looking at roughly the 1625, 162600 mark as our first target, because we've been there before in the past. So ultimately we have higher swings, but just recently we've seen this consolidation around a prior resistance level on a daily, and because of that, it's the same like the euro. I want to see a confirmation break above and trade higher. Until I get that, I'm not interested in trading it long. Even though the CTC is telling me that we should be longs, I still need to see a confirmation break higher than 16.4500 to give me the peace of mind that yes, commercial traders out there are looking for further longs on this, and then I'll be trading the momentum to the upside. Until such time, looking for possibly a consolidation for further returns to 16.2600. A break below that would take us back down to the 200 period, the institutional moving average at 16.15. Ideally, long term back to the 1600 mark, because psychologically that is a very big support and resistance line on a daily time frame. Next up is the US dollar against Swiss franc. There was talk of intervention yesterday on this pair. We saw after a bearish engulfing to the downside, we saw price hesitate to this area here. Slight indication of there was news out first thing yesterday morning GMT of intervention, and we saw the upside move on that. This morning we've seen a continuation to the upside following Asian market trading going into the European session. We are, however, still trading an intermediate in a long-term downtrend. You can see prices still trading lower. Trend direction is negative for this daily. We can see CTC is well extended to the downside, and because it's doing so, we should be looking for opportunities for further shorting. Consolidation, yes, we have, but if you look at just recently what price is doing with the swings, notice where the moving averages are evenly spaced out for further momentum to the downside. This just confides that we are in a very bearish trend where the moving averages are evenly split or spaced, put it that way. Notice the lower swings dictating that. Are we going to see any further upside movement? Could that be null and void as we get closer to this prior hesitation here, or spinning top at the 785? So potentially we can see a possible resistance or consolidation taking place at this area of prior consolidation or hesitation at the 78.50 mark. So expect consolidation in this area. We need to break higher than that. Even then, we're still trading on a negative trend. If it does break that intraday, we could see possibilities back to the 800 and ultimately back to the prior support and resistance level around about the 810. In particular, we saw a bit of consolidation at that area, 815 mark. So CTC daily still negative. However, we go into our looking at our intraday charts, you'll notice the consolidation taking place on our hourly in particular, you can see the higher moves to the upside, depicting a consolidation. We have seen where we are now. You can see price is testing a prior resistance and a prior support area at the level it is at the moment now. Ideally, a break above that would definitely give us an idea that we could see progression to at least the 78.56 mark in particular. Sorry, the 78.60 mark. It has broken this intraday downtrend. However, the long term, you can see the institutional moving average is still way above us, so the price still has to do a lot in order to gain a bit more conviction. If you look at the 30-minute chart, for example, we're now seeing the institutional moving average coming into play at the same resistance level. So price needs to do a hell of a lot more in my eyes to show that we're still going to see further upside movement. However, got to see a break and close above the institutional moving average to see any progression to at least the 78.60 mark or 50 mark in my eyes. So break and close higher than 7800 would definitely bode well for further upside movements intraday. Woke up this morning to see this candle on a daily. Absolute crazy candle. They can only stem one thing, and only one thing can actually make something, well, make the US dollar Japanese yen move this much, because you can see the trading range of most other candles. Look what happened here. The last time we had a massive candle that size, it was intervention. I guess we're probably seeing that as we speak now. There's news out last night that the Japanese government had made changes. In particular, if I can just find the news for you, they mentioned an enhancement to the monetary easing. They're increasing the size of their total asset purchasing program by another 10 trillion yen. So it was initially 40 trillion, now it's up to 50 trillion. They had a unanimous vote last night to raise that monetary easing level. But I think they've been talking for a while now. The US dollar is trading an all-time low against the yen, and they can't afford to have a weaker dollar, primarily for trading aspects of it, import, export, etc. like that, and most importantly for their recovery period, their position. We know that the Japanese went through that terrible crisis back in mid-March when we had the earthquake and the tsunami. They have a huge mountain to climb in terms of the economy at the moment now. We've seen their production figures slashed by almost half in some places because of that, and having a weaker dollar does not bode well for recovery, or a stronger yen doesn't bode well for a very quick recovery. So intervention was talk of the town for most parts of the people for the past week or so, and I think we're starting to see it now. We can see prices moving relatively higher, and we are going to be testing a prior strong support and resistance level at the 80 mark. Are we going to see a break of that to breach? Overall, we need to see price trading well above the institutional moving average, because that's the squeeze consolidation we saw prior to the breakout. So got a hell of a lot to do in order to gain a bit more strength. I don't think we're going to see it. I think we are going to see, as the previous intervention happened, we did see price moving for a while, for a number of weeks after the news event, but it just didn't stack up. People out there that are the commercial traders just didn't see it working, and sure enough we saw price reversion to the downside. There's just far too much negative news out in the US. There's far too much negativity coming out of the US for it to keep that momentum going higher, and sure enough we saw price revert downside, and I guarantee we'll probably see the same thing here. We are going to be seeing price testing an 80 or price support resistance, a very strong resistance level in the past, support. Got to get above that hurdle, then this intermediate, the major trend hurdle, and then even before we. So yeah, intraday, don't get me wrong, there is possibility of trading this to the upside. There's going to be a lot of momentum because intervention, that's what they want. They want to see a lot of buying of the US dollar because of that, and you are going to genuinely get that. Is it going to stack up long term? It needs to do a hell of a lot more to do that, and I don't see the US dollar having a lot of momentum to keep it up, because I just don't see any really great news coming out of the US to actually back it up. So the yen's going to keep buying US dollars to try and get it out of a hole, but it's buying against the trend of the market at the moment, and that's the way I feel about it. So make up your own decisions. CTC is still telling us to be short daily. However, you can see intraday we're seeing a lot of momentum to the upside. You can only see here, if you look at a 5 minute, 15 minutes, 30 minutes, the hourly. It's only the 4 hour and the day that just don't stack up. Every other chart intraday, the CTC is saying yes, get into it. However, I like to see it trading above 80. It must be classified as still bullish. Long term, even then, ideally, I like to be trading above 8200 long term to be seeing that. So we could still trade this, but you can see the price is starting to slow down now. As you see that initial move, we could probably see a consolidation before we see, if anything, another attempt at the highs, and you could look for possible entries to that. That's it for today, guys. Hope you have a fantastic trading day. Please make sure that you use the CTC properly, and if you are, please back it up with sound money management rules. It's important to do so, otherwise you're just going to be trading a template with a negative return. Please keep your trading simple. Look for breakouts, support, resistance. There's a lot of volatility going on at the moment now. A lot of negative news coming at the States. We have non-farm payroll tomorrow. Yesterday we got a glimpse of the ADP non-farm employment figures. They came out really negative, which tends to give us an indication of what non-farm is likely to be. Just looking at the figures they're expecting tomorrow. The non-farm change previous figure was 18,000. They're expecting 91,000 for non-farm employment. If it comes out worse than that, expect things to happen. Either way, they're expecting a better figure than the previous. If it comes out less than 91,000, expect things to fall over drastically. I don't see it. I might be proven wrong. I just looking at the previous figure, the ADP non-farm employment change. Yes, there was a slight increase. So let's see what happens tomorrow. I just don't see it at the moment now. They're expecting an unemployment rate stalemate at 9.2 tomorrow as well. So it could be interesting to see what happens. And if anything, if we do see any further bullish news coming for US dollar, then we'll probably see that rally continue. If not, then we're going to see a revert to the downside, and we should be only looking for entries to the downside. So as it stands now, yen, it's on a daily looking closer, trading closer to that 80 mark. The closer it gets to the 80, I think we're going to start seeing a slowdown. We like to see a break of that, a breach, and trade higher to give us indication that yes, the momentum is still driving to the upside. However, overall, we'd like to see it trading above the institutional moving average, because then we know long term that this buying of US dollar is definitely working, and then we could see progression higher. Until such time, I'm looking for just obviously the intervention. It's just the same thing that happens in intervention. A lot of buying into a currency to change the market sentiment, to try and get people to start purchasing it to help fund it. But I think overall, the overall underlying sentiment just won't have it, because they just don't see it being held at those levels long term. That's my opinion. Make your own decisions. If anything, trade what you see in the chart to keep it simple. Trade serenely, guys.